Let me start by the macro side of it. The economies we seek to be like the US, UK, South Korea, even that one you've mentioned, have one critical and very important element, that all these economies grew on the back of other people's money. Other people's money comes in many ways. One is FDI, foreign direct investment. When foreign direct investment comes, it is money that does not belong to us, that is coming to build us. It's a very good thing. There is, in that segment, under it, there is something called private equity fund. People who come, they look in to such a hotel, they realize it's in a prime place, but the owner may be short of capital. So they come and give in money, either in terms of debt or equity. They are given shares or they lend. It's called a private credit market. There is also another thing called venture capital. Venture capital is very well known, let's say in places like Silicon Valley, where all these companies we know, there would still be ideas in somebody's head, were it not for venture capital money that came to jumpstart the idea to become a commercial enterprise. So something called capital flow is one of the bases on how economies grow. I have not seen an economy that grows without that. The US stock market is double the GDP of the US. Can you imagine that? The US stock market is double the GDP of the US. So our GDP Kenya, let's say, is 20 trillion Kenya shillings. That our market would be like 40 trillion Kenya shillings. It's mind-boggling by itself. So that is the reason why markets must always be sacrosanct in terms of people must not adulterate the confidence of the market. Around this Safaricom, because I see where you are going with the question, our stock market has been, the English word I say, has been bearish, has been bullish, but also very bearish. This is what I mean. We have been at the bottom for some years, or for some time. So the market went up a little bit. But the valuations in the NSC are still grossly undervalued. Grossly. Yani, shares zinauzwa kama bure, if you compare with any other asset class. So, we have a situation where we have companies that have gone up by multiples, but we have one which has a transaction in the market called Safaricom that has barely been bullish. And I wrote it in my memoranda in Parliament that in a mature market, if it was in the US, the SEC would have investigated the trade of Safaricom trade, because there is a high likelihood that Safaricom share price was suppressed in the period of the transaction. It is glaring. I mean, anyone who buys shares, you can tell that why did it not be, when the other shares were going up by 80%, 100%, why was it sluggish, yet it is a company that recorded a 52% rise in half-year profit? How? So, to that extent, I just want to believe that anyone doing that would be doing it would be very disadvantageous to our economy. Second thing, I want to tell you this because, as you know me, I try as much as possible. For credibility's sake, the things you hear me speak, even if you call me on top of a mountain, I'll come with it, because I first of all investigate to know that whatever I'm saying, I can defend it. This is the second thing about our NSC. We have seen 3 companies being taken over, listed companies, some associated with government, where NSSF had a stake, where the government through the treasury had a stake. Somebody comes and buys. They first buy NSSF, then they go to the treasury, they buy their stake. And we are told these are regional investors. But I also want to tell you, These are not regional investors. These are Kenyans. And I can defend that statement anywhere. Recently, we had another listed company being taken over that deals with media. It is also listed. You know, we are talking about the market. When you list a company and you are doing that kind of a transaction, the CMA ought to have known that you cannot treat one shareholder separately from the others. Let me tell you what it means that way. NCB is a private company, NCBA. The stock market has no knowledge of whether you are a public or you are private. When you are listed, you become a PLC, publicly listed company. So we have NCBA, which is a PLC. When they do a transaction with Nedbank of South Africa, even a person with one share is given the same conditions. After the top shareholders negotiated with Nedbank, these other guys came, but they are coming into the market that even a person with 10 shares, they are given an opportunity either to sell to Nedbank, to convert their share into a Nedbank share and get a JSE listed company, or get a cash. Because one of the rules of CMA is that when you are an anchor shareholder means if I start a company, there are so many people who would buy into those shares because they know the anchor shareholder. Is that so? Now, when I exit without giving you signals, isn't that conning you? So now we have NCBA following the book. We now have a media house because the person setting the rules is the one buying. They come and transact with the anchor shareholder with zero reference to that young person, to that old man who bought the share because of the confidence they had with Aga Khan. So unamaacha kwa mata. Yet part of the reason they bought was because of the anchor shareholder. So that is one thing, some of the things that are so glaring. Take for example, East African Portland Cement is listed, even now. So a company is listed, a private person has 62%, and the National Treasury is giving a moratorium of close to 2 billion shillings of public money to a private company. That even somebody has the audacity to sign a letter in the National Treasury giving a moratorium of over 2 billion shillings owed to the Kenyan people by a private company, and giving a moratorium of close to 2 billion shillings. That is the thin line where it is not very tidy. Lastly, you invited me for Rotary Club the time we were in Rogai. And some of you asked me, do we buy KPC shares? And I called some of you. We did the math. If you took your phone now, this is what happened to Kenya Pipeline. Let me just tell you. And I've been waiting for anyone to challenge this statement. There is none because they know what I'm saying is true. And I'm not just dumping. I'm just trying to say, I wish these things can be done right. Kenya Pipeline listed, the day when the IPO was to be closed, the subscription rate was below 3.5%. If anyone in the National Treasury has a different figure, come and say it. Now, they extended by, you remember they extended by I think 3 or 4 days. That extension, a phone was made to President Museveni. My brother, oh my, why are you not doing this, man? Mapo ni baya hapa. Kwa sababu Museveni ni mkongwe na anaelewa maneno ya, he is experienced. He knew, you guys in your desperation, you will know Mzee ni Mzee. He said, fine, we may think about it. What are you giving us? Oh, we can offer you, it's 9 shillings. You buy most of our oil. It passes through this pipeline, fine. Museveni said, I'm sending my petroleum minister there. And they came. I don't know whether it was petroleum or transport minister. The lady came. Hey, please, Mzee, one is enough. He said, okay, I have some other business to do. They said, okay, 2, okay, chukua. Musea said now, when you are hiring any CEO, you bring the file to my office in Entebbe. I am the one to be giving veto power over the CEO of Kenya Pipeline. Oh, you know, these Kenyans will atatuletea shida wakiona hii mzee, please, we can do this later. But mzee, because he knows the duplicity that goes around, and he knew if I do this now, they'll change goalposts. He said, okay, look for somebody else to invest. They had to cede into Museveni's conditions. So Museveni will have 2 directors in KPC, but number 3, however qualified you are, Museveni is going to veto whether you are going to be KPC CEO. Now, that's not even the point. Now, even after he passed Museveni, the thing was still below 50% subscribed. So these companies were called. In Tuesday evening, when the IPO was being closed, that Tuesday evening, the CEO of NSSF, Your Money, was called to invest your money in Kenya Pipeline. And so that you see whether this information is true. You know, the beauty about listing is disclosures. That tomorrow, if you ask the registrar of Kenya Pipeline, as a Kenyan, to give you the top 10 shareholders, they should give you. Because listed companies operate by rules. So the CEO of NSSF was called. He invested workers' resources in KPC. The CEO of Superannuation Fund was actually on his way to Mombasa. Alirudia airport kwenda kusaini makaratasi. Superannuation Fund ni hii ya civil servants, pesa yenu ya retirement. The Unclaimed Assets Authority was called. The interest that had been accrued, which is part of the assets of the unclaimed assets, they were forced to invest in the Kenya Pipeline. Kenya Reinsurance, Kenya Re, were forced to invest part of their retained earnings, 4 to 5 billion, they were forced to invest. All these companies, by the time the IPO was closing, none had held a board meeting to ratify those investments, but they were pushed to commit and sign application forms. That is how KPC CEO, you saw a bell being rang, and after ringing, they say it was successful because the government bought itself. Now, this is the critical point. Listen to me carefully, because I told you, I only say things that I can verify. After listing at 9 bob, these are the figures. Kenya Pipeline has 18.2 billion shares that are, all the shares, the issued shares. Their earning per share is 40 cents. Their PE ratio is 22 periods. Nyinyi mnajua PE ratio. If you build a flat, and let's say buying, if you buy a flat at 10 million, and this flat gives you rent, net rent of $1 million per year, how many years will it take you to recover your money? Tufanye hesabu pole pole. If you bought a flat at 20 million shillings, 20, eh? I've changed now to compare the two. And it gives you rent of $1 million shillings. What is the PE? 20. Between the A and B, which would you buy? The flat, which flat would you buy? The A or the B? The one that is taking less period to recover your money, or the one that is taking longer period? Listen to this, how your money, because there was no IPO, it was a hoax. Now listen to how your money as a pensioner was invested. Kenya Pipeline has a PE ratio of 22 years. 22 years. KenGen has a PE ratio of 6. Total Energies has a PE ratio of around 6. All our local banks, KCB, Equity, has PE ratios of below 5. All of them. All the local banks. Kenya Power has a PE ratio of below 1.5 years. 1 year, 5 years. So of all those, which of all those I've mentioned from KPC, with your own money, hard-earned money, which company would you invest in? Which one can't you invest in? So a person was made to invest your money where you can't invest and where them can't invest. This is the thing, and I want to face NSE today as I am here. After listing at 9 shillings, they were again forced, the same buyers, to do something called share propping. Share propping is, they were embarrassed that a bell will be rung on the floor of the NSE and the share would collapse. So they were told, you know, I'm facing the camera for them to see. They were told to do what is called share propping. Share propping happens this way. When you are buying shares, it is like an auction. The buyers are on this side, the sellers are on this side. They were told to give an artificial demand of the share at 9 shillings. So that the share does not even go for 8.9 for the next 2 weeks. So that after Kenyans forget and they exit their demand, the share can go to wherever it wants. Ask yourself this, dear Kenyans. The share was listed at 9. It is now trading at 9.08. The person selling is already in a loss because if you net in commission of a share is 2%. So if you put in commission, those selling KPC shares are selling at a loss. Now, these companies that were called NSSF, Superannuation Fund, Unclaimed Assets, Kenyari and the rest, they were told, please prop up the share for some period of time. Don't allow it to go below 9. Wakenya wakisahau kulikuwa na listing, nyinyi endeleni na kazi yenu, the share can go to its price. And I can tell you through the math we have done here with you. A share with a P ratio of 22, even if it doubles its profit next financial year, it is still the most expensive share in the NSE. Wacha ninyamazie hapo.